This week, Tesla began trading as part of the S&P 500 index. But what does this mean, and does this bode well for those of us who have invested in Tesla for the long term? I discuss this and much more on today's episode. Hello, you wonderful people out there, and for those of you who celebrate Christmas, I hope you had a wonderful Christmas day and you got all the gifts that you were hoping for this year. My name is Chris, and welcome to the Business Report Show, where I give my non-professional and non-expert opinion about everything business and finance. Don't forget to hit the subscribe button, don't forget to hit the like, every little bit helps. Now, Monday marked a big day on the S&P 500 with the addition of Tesla to the index. Based on the current $660 billion market capitalization, Tesla will be the fifth largest stock on the index with a 1.69% weighting. Now, this is right behind the behemoths of Apple, Microsoft, Amazon, and Facebook. But what does all this mean? First off, the S&P 500 is an index list of the top 500 companies from a wide range of industries that are top of their class. It was started in 1957 and represents a range of U.S. stocks used as main benchmarks for the overall performance of the stock market. Now, to qualify for the S&P 500 index, a company must pay Bill Gates $1 billion. Just kidding. In all seriousness, though, a company must be worth at least $8.2 billion in the market capitalization. Stock price has to be at least $1, and they have to have at least 50% of its fixed assets in the US and have the last 4 consecutive quarters with positive earnings. So what changes have we seen so far since Tesla has been listed this past week on the S&P 500? Well, more of the same roller coaster ride.
I mean to do this, I don't want to do this. Oh my God, I want to break up. I want to break up. Oh.
And for those of you who have owned Tesla for a long time, like I have, you'll know what I'm talking about. Prior to the official inclusion on Monday, this past Monday, investors such as index-based fund managers and other hedge fund managers that use the benchmark as part of their portfolio strategy, they had to rebalance their portfolio by buying into Tesla. So we saw a huge rush into Tesla shares on the final run-up that Friday prior to the Monday listing, pushing the stock nearly up 6% to $700 per share on the Friday before the Monday listing. Now, over 200 million Tesla shares changed hands during that single session, more than quadrupling the 30-day average trading volume. It was estimated that the fund managers needed to close on approximately $80 billion worth of Tesla shares in order to stay within their index mandates. Now, on Monday, it appeared as though the speculators who rushed into the stock the week prior through their speculative thesis, they took some profit, and the stock was down 6.49% to about $650 per share. And the selling pressure continued throughout the week, with Tesla hitting a low of $615 per share as the news of the U.S. stimulus package passing the Senate and Congress didn't quite help much, more so with the fears of the mutated COVID-19 virus that has been identified in the UK, and it seems like it's hitting some other parts of the world. Now, midweek, we saw a bit of recovery with Tesla closing at $645 per share, and it looked like by end of week, Tesla had closed to about $655, clawing back some of the losses early on. So what does all this mean for Tesla, and what can investors expect? Before I dive into this part of the video, in full disclosure, I'm not a certified financial expert. You should really check with one before investing, and really, I'm just someone who loves business, who loves reading about business success stories, and one who likes to dabble in the stock markets whenever I have some time or some extra money in my savings account. Doesn't seem like a lot these days when I have 3 hungry mouths to feed. You know, priorities as a parent. Who would have thought? What can we expect with Tesla? Well, a Market Watch article noted that Tesla being listed on the S&P 500 reflects that Tesla's value and growth potential as a stock is prominent enough to deserve inclusion. Don't forget, there are huge ramifications for stocks getting listed on the S&P 500 because it actually affects fund managers, mutual funds, and hedge funds, and even financial planners who've placed their clients' investments into index-based funds. Now, in addition to all of this, there's a special committee at the S&P that deliberates every quarter on the makeup of their index to ensure the integrity of that index. So it's not like Tesla was just haphazardly placed in it because they're worth a lot of money at this point. It's also unavoidable to look at the performance of some of the other behemoths after they were included on the S&P index. Now, when Microsoft joined the S&P 500 on June 1st, 1994, the adjusted stock price at that time was about $2.11. Microsoft closed this past week at $223, and that would make it an approximate 10,500% increase, which explains why Bill Gates' net worth continues to go up considering the massive philanthropic initiatives that he and his wife puts together. Now, when Amazon joined the S&P 500 on November 18th, 2004, the adjusted stock price at that time was $4.37, with Amazon now closing, as of last week, at $3,200 per share. So that's an approximate 7,800 increase in share price. Now, of course, there are always examples of companies losing their inclusion on the S&P and some current S&P 500 companies that are really underperforming. However, the conclusion is that this listing is probably overall good news for Tesla and Tesla investors. Now, while Tesla is one of the most hotly debated stocks between long-term investors, technical analysts, those pesky technical analysts who've never started a car company before but have lots to say about the stock, and pretty much anyone who follows the stock market, one thing is for certain: the EV market, the electric vehicle market, is gaining tremendous momentum, and the future demand for Tesla product is only going to increase. Now, of course, you can't discount the fact that Tesla continues to struggle with their margins, but you got to spend money to make money. And Tesla's focused on capital spending to build infrastructure to scale their business up to keep pace with demand. I will say this: Tesla has created a business model and process that is showing positive results, including selling direct to customers, maximizing government credits, developing new products such as the battery wall and the Cybertruck, and building charging networks globally to really keep the owners happy. What will be interesting to see is how Tesla's growth is affected with the growth of EV production from traditional auto manufacturers like Ford and Toyota. Ford came out recently with the Mach-E, and more recently, Toyota has announced the development of a solid-state battery that can match or exceed the range of Tesla's current lithium battery pack, but it has significantly shorter charging times, no bulky heating and cooling systems required, and less tendency to catch on fire if the car's been in an accident. But one thing I will say, seeing as Tesla is in the EV industry and Elon Musk has been spending billions creating these battery production factories all over the world, I'm pretty sure Tesla has something in the works along the lines with the solid-state battery that Toyota is releasing. Now, I personally have owned Tesla stock for many years now, and I was lucky enough to get in early with a strategy to really stay long on the stock. My outlook at the beginning was that essentially, let's hold on to Tesla until I retire, because I took the approach that Tesla will one day become a household automotive name like Ford and Toyota. And when I take a look at the growth models with those auto manufacturers, think about if the future market share of EVs were the same as current market share of combustion engine car manufacturers. There's no shortage of commentary and analysis showing the downside risks of Tesla, and you should definitely review those thoroughly before adding this stock to your portfolio. But nonetheless, the story of how Tesla has grown and how they are investing for the future is why I continue to follow the company both in my stock portfolio and in general. So those are my long-term thoughts about Tesla. What's going to happen in 2021? Well, I suspect it will be the same roller coaster ride that all of us long-term Tesla shareholders have seen over the past 5 to 6 years. There's always a fight between the analysts, short sellers, and the long-term investors, and I don't see that stopping anytime soon, especially for 2021. What I will say is that the production numbers continue to go up for Tesla. And as some of their larger factories like in Shanghai and in Germany get to fuller capacity or get to higher productivity, I only see the numbers going up. Now, are there going to be some pressures from the competition? Absolutely. And I think that's to be seen as the traditional auto manufacturers always seem to struggle to get out of the door with these new concept vehicles. And Tesla seemingly can come out with new product, new vehicles pretty quickly. Now, one of the things I'm super excited to see is the release of the new Tesla Roadster. If I could afford that thing, I'd probably get it. That thing looks amazing. The styling, I would say, is definitely better than the first gen, even though the first gen looked pretty good. So we've got that to come out. The deliveries for the Cybertruck, we got to keep an eye on that and see how that goes. The other thing is the pandemic. Now, the smart thing I will say that Tesla has done is they've set up factories in these other countries. And one of their biggest markets outside of the US is China. And China seemingly has figured out how to deal with this pandemic, and their economy is ramping back up. And that only bodes well for Tesla selling their electric cars out in China. And one of the things that I've seen continually with Chinese companies trying to get in on the EV market, as they just haven't been as successful as Tesla. And one of the things I will say is, while the Chinese are probably great at engineering and replicating the current technologies, they do struggle behind a little bit when it comes to marketing and branding and really differentiating a product from its competitors. So I will say Tesla still has that leg up there, and they're only going to sell more cars in those new markets. Well, that's it for today's episode on the Business Report Show. Thank you for tuning in. And let me know your comments about Tesla. Are you an investor, or what do you see with that stock? Maybe you're a short seller. What is your outlook for Tesla for 2021? And don't forget to hit the subscribe button. Don't forget to hit the like button. Every little bit helps for this new channel I've created. And I'll catch you next time on the Business Report Show.